So welcome to the part one of debits and credits, and we're going to start with the accounting equation, and you will understand as we're going through the video why the accounting equation and how that helps with debits and credits. Okay, so part one we're going to discuss accounting equation. Part two I'm going to connect accounting equation and debits and credits, and part three we're going to discuss some more special cases. So as you saw me every time I mention my videos on LinkedIn that you have to understand not only how to do something but why, right? So memorizing things is not as important. It is more important to understand why you do something, and then you can recreate. This is the double entry accounting is a perfect example because it's at least I would say 600 years old, maybe plus, and starting with merchants in Venice, but I'm sure it's older than that actually. And we have not improved on it. So whatever we got from them, historically, is what we're using now, right? So obviously, it is a very intelligent and flexible system, and you do not need to memorize it. But in order for you to understand double entry and debits and credits, what you need to do is you need to understand the logic behind it, right? So the first part one, we're going to discuss accounting equation that will give you the base for part two, and you'll be an expert. All right. So all right, let's go. So first, accounting equation, right? So it's assets equals liability plus equity. So what does it mean? Assets is everything you have, let's say furniture, cash in the bank, assets, like furniture, computers, cars, etc., etc., etc. You have them in your possession, technically speaking, but it doesn't all belong to you, and that's why it shows you that your assets equals liability plus equity. Liability means everything you owe to people. So, for example, if one of your assets is a car and you owe money, on a car, a loan, etc., until you pay it out, technically speaking, the car is not yours, right? So, and if you equity is the part that belongs to you. For example, if you shut down business today, after you pay out liabilities, what is left, right? So once you pay out, for example, in a business that there are no debt in the business, your assets will be equal to your equity, right? Because everything you see in front of you, everything in your possession, money in the bank, etc., it's all your equity. But let's go, one line by line, right? So for assets, resources owned by company that provide future economic benefits, cash, inventory, building, machinery, accounts receivable. Accounts receivable, invoices you sent out and not being paid yet, it's also an asset. But however, obviously, it's not immediately available to you. And as a side note, and we're going to discuss balance sheet, but the assets are organized in order of liquidity. So, for example, cash will be on top, and the least liquid, items will be lower on the list, right? Liabilities is everything you owe money, debts, payables, account payable, credit, etc., etc. Equity is what is your share in business if you close down the business. So, to give you a simple example, if I open a lemonade stand, I have $5. I use $5 I have $5 in cash. I use that $5 to buy lemons, right? My lemons are my asset now. If I decide an hour later that I give up and I'm done, technically speaking, my lemons, the $5 worth is my assets. I can take them with me and go home, right? Obviously, in real life, if you sell lemons back, you're not going to make the same $5 again. But for the sake of the argument here, right? So the to make it easier to visualize, right? We're going to discuss right now balance sheet, and as a reminder, it's part of the three most essential statements: profit and loss or income statements, or P&L, balance sheet, and cash flow. For this purpose, right now, we're just going to discuss balance sheet, right? And in future lessons, we can discuss the other statements. Okay, so here is what the balance sheet looks like. Right? This is the most simple case. You have assets on top, right? And it's cash, inventory, equipment. And you see how they're organized actually in the what I said before. I don't have accounts receivable here, but you see how cash is on top, inventory, equipment. So the logic basically, cash is available to me immediately. Inventory, I can kind of maybe like sell it wholesale if I'm desperate. Equipment maybe take me longer. So they're organized in order of liquidity. How fast I can get to the cash, right? That's a side note. Liabilities, you see liabilities here. You have equity, and you see that total assets and total liabilities and equity equal to each other, right? So now why am I bringing this up, right? The just for you to visualize also the balance sheet and how it works. This is a very simple example of this is your wallet, right? In the wallet you have some cash and you have credit cards, right? So guess what? If you in your wallet you have $50, USD 50, right? And you have some credit cards. If you have any debt on a credit card, it is obvious that the $50 will not belong to 100%, right? So, for example, $30 debt, it means now you have to pay it out because it's $30 liability. So you're now left with 20, right? So what's your equity? Your equity is 20, right? So now that this is just another example for you to kind of like visualize in practical terms. And what is the reason for me to bringing up a balance sheet in this, in this training? Because if we turn the balance sheet on the side, right, the same picture you saw from before, remember the 50 equals 50, and we put accounting equation on top. Do you see that it completely it's a reflection, right? So the balance sheet on its side is the reflection of assets equals liability plus equity, right? So it's very now easy for you to understand that okay, this is in the balance sheet. This is all that basically I see in front of me, for lack of a better word, right? This is all my liabilities, and that's my part, right? So if I take my liabilities, deduct them from assets, and guess what? This is gonna be my equity, right? So for this lesson, because I'm trying to keep this lesson short, the goal here is for you to understand this part, right? And now the last component is important for you to understand is that if you understand the accounting equation, it's becoming actually very interesting because now you can sort of manipulate the information. So the original one I showed you is assets equal liabilities plus equity. However, you realize also that now equity means assets minus liability. Or the other way is, if you want to figure out company's liabilities, you take assets and deduct equity, right? So it's kind of like you can do different manipulations, but it's important just for you right now to understand how it all works. All right. So thank you very much, and I'll see you all next lesson.